Non-farm payroll day, so I'm a little bit earlier than I typically am. I usually come out. I do these around 7:45 my time, 8:45 Eastern. A little earlier than normal, but I'm up and I'm kind of watching the markets around non-farm payroll. I always find that interesting. I don't trade during non-farm payroll. Trading the news, in my opinion, especially in Forex, is kind of a recipe for disaster. Just simply because of the way spreads widen and the volatility that can come from it. So I think it's better just to let the news do its thing and play out. What I'm going to do is the same thing I do every morning. We're going to have a look at the futures market, going to have a look at the Forex market, going to have a look at the crypto market, and then I'll let you guys get on with your day. I'm going to try to keep it short. I don't know if I actually will. I always say I'm going to try to keep it short. I end up going like 20 minutes anyway. But yeah, my goal is to try to keep things to a reasonable level and give the most insight that I can in order just to continue to help you guys along. Big takeaway every day is just simply consistency, right? It's all about consistency. Before I start, quick shout out again for my son. He's 5th grade. He had the spelling bee yesterday, the district level spelling bee. He competed in that, came in about half. So there was 30 contestants. He got knocked out in round 5 and made it to about the top half. His goal was to make it to the top 5. He didn't quite do it. What was great, I mean, obviously I'm just proud of him for getting there, but what was really cool that I didn't know is in this round he was competing against 6th, 7th, and 8th graders. So he's a 5th grader. There's only a couple of 5th graders, and they were competing against upper grades. So the fact that he made it as far as he did, I'm a proud dad. I have to always give that shout out to my kiddos. So really proud of him. He did a great job yesterday, and yeah, it was cool to see. Again, doesn't get the spelling for me. I was laughing to my wife pretty much all the time through the event, was going, oh, I would have missed that word. I would have missed that word. So anyway, good thing it wasn't me up there. So let's get over to this market. We'll talk about that. What's going on over here? Let's start with futures. Now let's start. I don't know, where do we want to start? Yeah, let's just start with futures, and then we'll get over to everything else. I mean, we had the non-farm payroll report already came out. Kind of a mix of good and bad. Might be something that we're getting prepared for what we might see in the coming months. There's going to be a lot of fallout from the coronavirus thing, and the market has certainly not reacted to it just yet. But I think there is going to be some, well, that's bias, right? Again, like I said before, we all are going to have our personal biases. We just have to, when we're trading, we have to kind of ignore that and trade what our plan is and what our charts say. But anyway, yeah, I feel like there's going to be some fallout coming up. Non-farm payroll, good and bad. So good in that we had non-farm employment change that was positive. Bad in that hourly earnings are down and the unemployment rate is up slightly. We'll see what ends up happening in the market for the day. Popping over here to futures. Again, we all have our biases. One of the reasons I don't typically even look at this news is because it does allow us to form a bias, and that might affect our trading style and our trading level. With that said, here on the S&P minis, we are still in an upward trend. We pushed to highs yesterday prior to the U.S. session starting, pulled back a little bit during the U.S. session, and U.S. session actually pulled back right to the open area, which we had talked about in yesterday's call, that's often a good level to trade from when if the market's trading above it, pulls back to that opening level, then sometimes it's nice to be able to buy off of that. Same if it's below it and it pulls back to it, then it's a good area to sell from. All of that happened right now for this morning. So anyway, what we're looking at right now is we are still in an upward trend here. So the play, if you want to call it, would be to continue to look for key levels to buy off of support. So the first level down here is 33.25. Looking at this as an opportunity potentially once we get under regular trading hours to look for buy opportunities off that to see if we can take the market longer. And then below that, the next level down 33.16 and then 3,300. It's at 3,300 to 3,305 area as potential buying opportunities. Well, and what we would do is we'd continue to buy it until that that trend changes. At some point that trend is going to change and it may start pushing down. The big challenge is no one knows when that's going to be. So all you can really do is have a plan and stick to the plan. If you're uncertain, you're like, hey man, this news is coming out, we've got this whole virus thing back here, we're at all-time highs, I don't feel good about buying into that, then don't trade it, right? Again, easier said than done, but you don't have to trade it. You don't have to trade anything, right? But the trend is up, the plan would say buy the pullbacks until that trend changes. And the pullback areas would be 33.25, 33.16, 3,300. But be prepared to be wrong. If it cuts through that, pushes down, you're wrong, you're out of the trade. Don't try to start revenge trading, because that's often what happens is we form a bias and then we think something should happen according to that bias, and then we take trade after trade after trade trying to support our personal belief, when all we really need to do is just simply execute the plan consistently, which is easier said than done. I realize the psychological component is the toughest piece to manage when it comes to trading. Over here in crude, we're still on a downward trend. We talked about selling the pullbacks on this one. So we're still in that position. We're below 5,100, area where it's struggled here. Certainly looks like an opportunity, if it does push back up, to be able to sell off of that area. We do seem to have found a little bit of a bottom here at 50. So that's another support level down here would be 50. If it can break through 50, maybe it continues down. Same exact discussion as we could have around the S&P. This hasn't seen these levels in quite some time. So a lot of people, if you listen to the news, saying oil is at a bottom. It can't go any lower. Very dangerous things to say, because can't, sometimes is, who says it can't go lower? It can absolutely go lower, Be careful about making those very hard and fast definitive statements, because the market's going to do what the market's going to do. Can it go lower? Absolutely. Will it stop at 50? I don't know. There's no absolutes. Could it stop at 50? Yeah, it could. So you've got to play it accordingly. And again, for me, trend is down. So we're in a downward trend on the 4-hour. So we'd be looking for key levels to sell the pullbacks on it. And we would keep doing that until that trend changes and we begin having an upward trend. Once we have an upward trend, then we'll look to buy the pullbacks there. So right now, look at key levels to be able to sell off of here with crude. Over here in gold, down here at the bottom, we've been in an upward trend. It flipped a little bit on us, and now we're back looking like we may be pushing into an upward trend again. Although we are kind of flat, we are above the longer term moving average here. So we've broken above it, we've closed above it. The thing is, our shorter term hasn't crossed over yet, indicating for me that we've got that what's the word I'm looking for? Confirmation. There we go. Confirmation that we're in that upward trend. So right now, gold's still in kind of a holding pattern. These haven't crossed to confirm the trend, but the trend has been over the last couple of days, or last day really, has been a downward pressure on gold. However, that will be very much reactive to what happens with the regular market over the course of today. If we see that risk is coming out of the market, investors aren't as keen to be pushing more and more into stocks, then we'll see that money come out and potentially go into gold, which would then cause gold to continue to push longer on us. So right now, though, where I'd say in a holding pattern on gold. Let's wait for confirmation here one way or the other. I've mentioned yesterday, that's my personal bias. I have a really hard time selling gold right now, given everything else that's happening around. So again, if you've got a personal bias and it's giving you something different and you don't want to trade it, then don't trade it. It's not really sticking to your plan, but it's better to not trade it than have a personal bias where you're trading opposite to something that your plan's telling you to do, just simply out of spite or out of bias or a need to be right. So anyway, there's that. Over here on the foreign exchange market, well, let's actually go to this screen over here. And darn it, somehow that wants to display everything. Let's take that away. Yeah. So over here on the foreign exchange market, same kind of position that we were in the last couple of days. Some of our pound pairs have moved an absolute ton. Like the pound Aussie, we saw there was actually some news yesterday, but the pound Aussie, for example, has really exceeded its typical range. However, there are others like the pound USD, which we talked about yesterday as well. The pound USD, we're on a 30 pip range right now coming into the U.S. session on an average of about 100. So, certainly talking about potential for opportunity there. This is a pretty high potential for us for opportunity to trade on like the pound USD, which typically has a little higher range, and we're sitting at well below half of what it would typically move. So that's certainly opportunity for us right there. Euro pound, same kind of deal, although yesterday it didn't move the last few days. I mean, we're talking 32 pips on an average of 55, not quite as much opportunity there. Really for me, just looking at activity and current ranges for the day versus averages, the pound USD, is probably the one that gives us the most opportunity. Right now, kind of trading together as the U.S. session's been going, which accounts for the tight range. But we'll see if we get some divergence one way or the other. If we start seeing the pound pushing to strength, that might be an opportunity to pair that against the USD. Really kind of depends. I think we'll see more movement with the USD as the stock market session gets underway here in about 45 minutes. So the live trading session, regular trading hours get underway. Let's look at one more. Let's talk about crypto real fast and get this out of the way here. This was a screenshot I took just to reiterate something around news. Let me pull this back up over here. Notice the spreads. This is really for another topic, but I'll for those that are new and maybe haven't seen this before, one of the reasons that I hesitate to trade, especially Forex around news, is because we see spreads widen so considerably. A good case in point, look at the New Zealand USD, which has what's this current spread right now? It's hard to tell. It's fairly tight. I mean, it's certainly not tight from we're about a 1.5 pip spread on New Zealand USD, so about a 1.5 pip spread there. But then during news, the reason I took the screenshot was to be able to show that to you. And during news, that was a 14 pip spread. At the time that I took this, it might have even been higher at some point. So imagine, if you don't have your bid and your ask on, you often don't know what's happening in the marketplace. So if you're trading Forex and you don't have the ask line showing on your charts, put it on there, because you're only getting half the picture. A lot of people show and I'm going to go down a rabbit hole, so don't expect this to be ending anytime soon now. One of my peeves around folks that teach foreign exchange and don't have the ask line on is that they're giving you bad information. They're giving you half the damn information you need to trade with. So I see people a lot of times talking about look at this. So keep in mind 14 pip spread. Keep in mind a 14 pip spread here on the New Zealand USD. Okay, let's just keep that in mind. Let me save this, get out of the way. Very often what you'll have is somebody talking about different methods of trading, and they'll talk about, look at this bar really pushed down and it would have locked you into X amount of profit, and you would have only had a couple of pips of risk right here, and they might be following at the top of the last bar. What they fail to account for is the fact that on any given news event, that spread can suddenly go from 1 or 2 pips to 15 pips, 20 pips, 30 pips, and you're not only stopped out, but you're slipped where that moves against you. So you've got to have both your bid and your ask on the chart when you're trading, and keep in mind what that spread is and how it affects your actual performance, and what it could do to your potential performance, and how you want to place your stops. You've got to keep in mind where your stops are placed, and whatnot, because just simply a widening of spread can stop you out of the marketplace. And if you're only having the bid line on, you're never seeing where you're being filled on the other side of the orders, right? So keep that in mind. All right, what else do we need to talk about here? Forex, right? We need to bring up Forex. Let me pull this back across the screen, and let's talk about what's happening in the Forex land over here. So that would be here on this chart. Over here in Forex. So what are we, or not Forex, crypto. See, I talked to you guys before I have my coffee. You guys know when that is, because I'm mixing all my words. Over here in crypto, we've been on quite a tear. Bitcoin and Ethereum both have been on a bit of a tear. This is the ETH chart. This is the Bitcoin chart here on the right-hand side. ETH, we've blown through some key levels. We're now pushing up to this 2220 right now, which is another key level on the 4-hour. Haven't seen it in quite a while, but here we go. If we get back here, we can see this was a top previously for us. So we're seeing a lot of momentum, and we're definitely in an upward trend. I would wait personally for pullbacks to key areas before I bought more. Same with Bitcoin. We're coming up to the 10,000 mark. We haven't quite reached it yet. 10,000, if you're looking to be contrarian, nice opportunity to potentially sell off of. But if you're looking to play with the trend, you'd want to wait for pullback. So pullback to 9,500, 9,450 certainly would be the first key area to potentially look for a pullback here in order to take more. So same exact process that I look at in the futures market, we're looking at in the crypto markets, which is look at key levels and then trade off of them. Any kind of a highly speculative market, we're going to look for that simple support and resistance style trading, and then trading with the trend. All right. Final one over here, just to give a quick update on this one. I talked to my buddy a little bit yesterday. We're putting together a plan for how he's going to release this, and I'll be talking to you guys more about that soon, about how you can get access to the bot level of what he's put together here. There's going to be two. There's something available to U.S. clients and something available outside of the U.S. So the outside of the U.S., you guys can participate in the exact thing that I've been utilizing here for the last couple of months. Inside the U.S., it can't be done the same way, because there's lots of restrictions around having people trade for you and whatnot. So inside the U.S., there'll be some training on how to set up automated trades and how to set up services and whatnot, and then ways to hook you in to give you access to create similar results to what is being seen here. So again, don't know the full breadth of how it's going to end up coming out, but it looks like it's going to be something that's pretty cool and will allow you to see some fairly similar results to what I've been seeing here with the test version. We're at the 7th of January, February, and right now, as of this morning, this is up about 5% for the month. So, last month it ended with I'm trying to pull up a screenshot here. Last month it ended with about a 13% gain, and this month started, that's the wrong one here. Here we go. Started February 1st, if you can see the screenshot time, at 2403. Currently we're at 2531, which is about a 5%, I think, increase there. So, rocking along, doing what it should be doing. Does it win every day? Absolutely not. It'll probably, as this market over here pulls back, I would expect to see losses over here on this one. It's good at what we should be doing mentally, manually. It's good at controlling the losses, which is what it's all about. And no matter what you're trading, whether it's in crypto or Forex or futures, one of the biggest things that hinders us very often is simply not controlling our losses, holding on to things longer than we should, out of that bias or out of that need to be right or proven right or whatever it might be. So the more we can do with something like this, I think the better off we'll be. I'm working to automate more and more and more of what I do just to get myself out of it. And I've talked before about that I think that the mental aspect of trading is the hardest part of it. It's easy to have a plan. It's easy to know what that plan is. It's hard to execute that plan consistently. So the more we can automate, the better chance we have of being consistent and actually letting go of those losses and not holding them, actually allowing those winners to move how they should move without that manual intervention of getting in there and having a couple of points in your favor and going, oh my gosh, I think it's going to reverse. I've lost the last 4 trades and this one's into profit just a little bit. I'm just going to lock in my profit and take it. The little mental stuff that pops up always for us. So I'm looking at ways to automate more and more and more. In Forex, there's automation that I already have that's on the website for you, which is automation around how to manage your trades with trade managers. So puts in your entry, sets your stop loss, can set a take profit point for you, or it can manage it just by simply moving the stop down, measured by an ATR trailer. There's a lot of things that we can do that help us automate the trades once we're in them. There's also things that we can do to automate getting into the trades. So looking at ways to put more and more and more of that together for you as well. So that's it. Have a great day.